It's still firmly in the conversation because of its real trading volume in stablecoin pairs, the vote escrow incentive model that sparked the Curve wars, the ongoing role in DeFi liquidity, and the simple fact that any protocol acting as core infrastructure for stablecoin swaps continues to draw attention. If this is useful, hit the like button, subscribe if you haven't already, and leave a comment with your honest take on CRV. I actually read them. Looking at ratings and signals, a lot of the technical scanners and community sentiment have leaned cautious to outright negative for an extended period. You'll see a mix of hold and sell readings, especially from tools that track the longer term trend and the position relative to key moving averages. Funding and open interest in the derivatives markets have flipped around, but the short term outlook from pure chart based sources remains defensive until price can reclaim and hold above recent resistance levels with convincing volume. There is more coverage for Curve than for lower ranked names because of its ranking and foundational DeFi role, but the consensus from technical and sentiment tools has stayed measured rather than strongly bullish. On the technical side, the bigger picture remains a clear long-term downtrend from the much higher levels reached in previous cycles. Price has spent extended periods making lower highs and lower lows, with recent action testing support near multi-month levels. Short-term bounces have occurred but have consistently failed to reverse the larger structure. Momentum indicators have been mixed to weak on the higher time frames, often hovering in neutral to oversold territory without producing strong sustained recoveries. Moving averages on the daily and weekly still lean bearish, and volume has been relatively subdued outside of occasional spikes. Short term, it feels more like a weak consolidation or bounce inside a larger corrective structure than a clean trend reversal. You can argue there is some resilience when price holds the recent lows, but the overall structure still looks heavy. What's going on with Curve DAO Token right now? The chart has been under pressure for a long stretch, sell signals keep appearing on the higher time frames, and yet some people still argue this thing is somehow undervalued at these levels. How do those two views even sit together? Let's talk about it. Curve is one of the foundational decentralized exchanges in DeFi, specialized in efficient, low slippage swaps between stablecoins and similarly priced assets. It powers a suite of products including the core AMM, the CRV USD stablecoin, and lending markets. CRV is the native governance and utility token. Holders can lock it as veCRV to vote on emissions, share in protocol fees, and boost liquidity provider rewards. It currently ranks near the top 100 by market cap with solid daily volume, and the price has been trading near the levels you're seeing after a multi-year decline from previous cycle highs. That's the classic trap setup. The technology is real, the protocol continues to process meaningful volume, but the market keeps assigning it a lower valuation while attention stays elsewhere. Retail often gets caught here, buying the foundational DeFi liquidity argument while the larger trend remains downward or sideways. Here's the real debate. Is CRV actually undervalued at these levels, or is this a value trap after years of relative underperformance? One side points to the real stablecoin trading volume, the vote escrow model that aligns long-term incentives, the fee sharing mechanism for veCRV holders, the distance from previous highs, and the idea that core DeFi infrastructure could re-rate if capital rotates back into the sector. They argue that if usage stays strong and the token remains central to governance and emissions, these levels could look reasonable in hindsight. The other side says, look at the chart and the market structure. Many DeFi tokens that peaked during earlier cycles have struggled to hold value once attention faded. Volume and momentum have been soft for long stretches. Emissions continue. Competition from other AMMs and L2 liquidity hubs has intensified, and the market has consistently treated CRV as a lower priority name despite the underlying activity. Short term, the picture still looks more consolidative and reactive than impulsive. You need to see stronger volume and a clean break of the recent resistance cluster before the short-term bias flips with any real confidence. Longer term, it comes down to whether Curve can convert its position as a core stablecoin liquidity hub into sustained demand and relative outperformance for the CRV token. That's the only path that turns these levels into something more constructive instead of just another extended consolidation or grind lower. Nobody knows which way this resolves. The chart is still fighting the technology narrative, the protocol continues to process meaningful volume, and the market remains selective about which DeFi infrastructure stories it rewards. So, the real question is simple. Is this the kind of project that can finally break out of its long underperformance and re-rate higher, or are we just watching another established DeFi token settle into a prolonged period of low relative interest while people argue about valuation? Risks are meaningful. Volatility is still present. A broader risk of move in crypto or continued rotation away from mid-cap DeFi tokens can pressure the price further. Downside remains open if the recent support zone breaks and the downtrend simply continues. Retail traders love the long-term Curve is DeFi infrastructure story and end up holding through multi-month or multi-year underperformance. Liquidity is solid relative to pure microcaps, but still thinner than the very top names, so larger moves can still happen quickly. There's also the structural risk that comes with any emissions-based DeFi protocol. The narrative has to keep generating real volume and demand, or the token simply fades under ongoing emissions and competition. Bull case versus bear case is fairly clear. Best case, broader market risk appetite returns to DeFi, Curve continues to dominate stablecoin liquidity, fee generation supports veCRV holders, and price manages to reclaim key resistance levels and start building a higher base. In that scenario, you could see a meaningful recovery toward previous intermediate highs over a longer horizon. Worst case is the opposite. Volume stays muted relative to peers, relative performance continues to lag, and the downtrend simply grinds lower toward new cycle lows. In that scenario, the undervalued talk just becomes background noise while price continues to underperform.